All right, what is up, everyone? It is going to be another Top Ops Dissected video, this time for September 2023. And so as I tweeted out earlier in the month, I actually think September 2023 was one of the slower months of the year, especially when you compare it to stuff like March with the banking crisis. Nevertheless, there were still a couple good ops, but I think a lot of traders struggled overall. And especially as I speak with people at, say, Trillium or SMB, yeah, I know there were a lot of traps out there, a lot of tough times, but nevertheless, still a couple places you can piece together a month. And so we are going to go through those one by one. And so first, let's dissect Verb on September 5th, 2023. And so what we have here is this is an in-play ticker with a fresh news catalyst. And again, a lot of these news catalysts in microcap world can be kind of dumb. This was just a TikTok integration. Yes, we can roll our eyes, but nevertheless, we just want to treat it largely as binary and not try to say the market is dumb or the market is wrong, but just trade what the chart gives us. So what happens in Verb is it makes a really solid opening drive. We put in a high there at around 220, and then we start to consolidate all day. Now keep in mind, like, this stock is pretty much just holding in the middle to upper of its range. And so I would still classify this as a stock being on the stronger side, and we consolidate. We do start to turn lower, and I think that's where a lot of longs might start to give up and where a lot of shorts might start to press, but then there's no follow through. Not only is there no follow through, but then finally, as we approach the end of the day, we start to curl higher, then bam, we break to those highs. And this is just really a basic technical resistance break. Very, very classic play. But again, this is doing the most volume it has ever done. The share turnover is enormous. It's so important to think about that in your work and in your analysis. Like, it's not that we're buying the break to highs in every single stock there is, right? We're buying the break to highs in a stock with a breaking news catalyst. We're buying the break to highs in a stock that's doing the most volume it has ever traded. And it's in a stock that's consolidated in the upper half or higher of its range after a very nice opening drive. So those are some of the variables that I think make this so nice. Again, we can just do the same, just traditional 2-minute bar, break of prior bar lows as the trailing stop. And this ends up not some crazy win, but it is a very liquid, easy layup trade that I thought is worth highlighting. It's just a place where, like, look, you know, it's just a layup, not a home run, but this helps you start to piece a month together and also cushion some of the losses that come from some of the traps out there. The next trade I want to discuss is this HKIT on September 6th. And so this falls into a category that I like to call just the Chinese liquidation plays that have been somewhat common this year. You have tickers like LYT that did this. And so there's always a couple key commonalities, I think, that you see in these. For starters, they tend to be run-up tickers that have gone up at least probably 100% more, a couple 100%. These tend to be Chinese tickers. And I think what's really going on is some very unethical, manipulative pump and dumping over like WhatsApp groups in Asia, where people get everybody to just put their money in. And then the reality is the insiders kind of end up dumping on these people. It's kind of weird though too. Like, a lot of it still doesn't make sense to me, because what you do end up seeing is in a lot of these, some massive stacked bids when these do collapse. And it's odd to me who actually has that much of a percent of the float and everything else. But really, one of the big indicators when these collapse is those stacked bids end up leading to this massive share exchange. Then it's just a total vacuum after that. So what happens, is this HKIT makes this massive run up and is kind of all over the place. But then what happens is you get like all these stacked bids, and that's when you really want to keep an eye on it. And then on the intraday chart, we were kind of sitting on those bids, and then we start to consolidate pretty heavy on it, can't really push off. Then we kind of sit on it. Then finally, bam, those bids break, and then the vacuum occurs straight into the limit down. And so often when these do actually crack, these really end up being a huge, ridiculous retracement. So often these go 90% plus. So with that short, when those bids crack, you can, again, just do the same traditional stop, the break of prior bar highs. This leads to a just totally incredible win. I then want to avoid no man's land, like, pretty much around that 1 p.m. to 2:30 range is all just no man's land to me in the middle of the range. I don't really even want to try for a long in this, just because these tickers really do end up getting so crushed when they do collapse. Very, very dangerous thing to play long. But when we fail to have any meaningful bounce, we start to compress on these lows. And normally I wouldn't go for this short at all. But the reality is that these end up trading so heavy and do end up going into the single digits. So because of that, I would be interested in that short later on that I have circled in yellow. And it really is just kind of game over for these tickers at that point. Again, these really do not bounce meaningfully. So even when this is going into the single digits, I think at this point it's kind of just a total chump move to just kind of start thinking for a long. If you were to go through the data points, these do not bounce, do not lose money fading this. These are just game over. So then I kind of want to contrast this with HOLO, HOLO. So this was also kind of a Chinese liquidation play. It is a Chinese ticker. It was run up. But what was different about this one was it didn't really have those stacked bids, which is kind of the main tell. And it really did just kind of crack right off the open. So I would certainly want to be wary of fading this and buying into this, but to actually capture the short is far harder. I do know some people that just join the momentum. Then you kind of just give it a trailing stop. But overall, like, these nuances are what makes a play super high probability and good versus just kind of okay. And I think like HKIT is the much more predictable play because it had the box there being just a huge tell. HOLO just kind of is what it is. But again, at the least, as far as damage control, you don't want to be fading that, knowing that it's Chinese, it's run up, and so often these collapse into the single digits. Now we're going to jump to Disney. There wasn't that much breaking news in September. I think the last couple months I've probably highlighted a couple headlines that occurred, but this was just kind of a simpler one and one of the better ones, and was what was otherwise a pretty quiet month as far as breaking news. And so one thing that I think is important in this write-up is the importance of taking good notes. And so what happened is there was a breaking news trade with the headline, Disney and Charter near deal to end the ESPN blackout. So this headline was broken by David Faber on CNBC, which is why it's important to always kind of be paying attention to that. But many might be asking, how do you know that this headline is a big deal? How do you know how far this might move? And so a lot of that is by paying attention and taking really good notes, ideally in your software or whatever else might work for you. But what happened is that Disney had previously fallen about 3% on September 1st when there was news that a deal was not reached. So if you have that in your memory, if you have that ever noted, if you have that in your database, or if you have that in your software notes, you need to always be game planning. Okay, Disney dropped 3% on this news. It's very plausible that that news can be reversed. And so I think what a really good news trader is always thinking about is what could happen. What do they need to game plan? If there's some big M&A headline, what if that headline gets denied? What if that offer to be bought out is refused? What if another bidder comes in? So I think a lot of that comes down to preparation and just knowing in your head, okay, Disney was down 3% on this deal not being reached. I need to be prepared in the coming weeks for a headline that, okay, they came to a deal that's going to be good for both of them. Sure enough, it came. You want to buy as quickly as you can. Then the typical prior bar lows does you a solid again. So nothing crazy there, but nice little layup. And now we get to what I think I want to focus on the most for this video. I think the ARM IPO was the best opportunity in September. Why is that? So first of all, it was the first super hot IPO in ages. And this is, again, something that you can game plan and prepare for. You need to be dusting off that playbook, and you need to go through studying past super hot IPOs as comparables. A lot of these tend to make a solid opening drive. A lot of these tend to consolidate, and if they break to highs after a nice consolidation, you want to be in it. A lot of the super hot ones that close strong tend to also have overnight momentum and have really nice gaps. So all those plays you need to be dusting off, and also knowing this is so hot, you need to think, what if this ends up weak? How do you want to play that, right? Like, we had an era when a lot of IPOs, I mean, I think off my head, like Uber, Lyft, Peloton, all of those tended to be on the hot IPOs, but weak and faded. And so you really want to think both sides how you're going to do this. The opening print itself can be a little tough. I'd say on average, like, the hot ones tend to go up, but a lot of that's going to be box and liquidity based. Do I like what the bids look like? Are we, close to the pricing or above the pricing? A lot of those simple rules can help the odds be in your favor. If we're opening up at $50.10, so likely there's going to be massive bids at $50 that you can use as liquidity. So to risk 10 cents on an opening print at like $50.10 would be amazing. So that's just kind of how I start to think about those opening prints. So we do make a super quick range in the first bar, and that's going to start to set my levels. And then when we break to highs above $58 after the 55.50 level holds, that's where I want to get in, and then just do the usual 2-minute bar stop. And so that leads to a very nice leg. Then, at least for the long side, we start to be in no man's land. And I know a lot of people are interested in shorting this, but I just don't really see the appeal, right? This is a strong IPO. It's opening far above its pricing. It made a very nice opening drive. And then we're consolidating in kind of just the upper part of its range. At no part was it so euphoric yet or anything like that. So if we're just consolidating in the upper end of its range, I don't really see the appeal. We do kind of start to roll over, and probably a lot of the longs are giving up. A lot of the shorts are probably starting to get aggressive. And now you all in your heads should start to have alarm bells going off, like especially in the format of how I'm doing this video. This chart should immediately be an analogy to what I just said in that VERB trade, right? Verb was an in-play ticker. It made its opening drive. We then consolidated and started to roll. It then kind of gives no relief to the shorts, shakes out kind of the weak hands, and then we go off to the races breaking out, and that technical entry is amazing. And so this ARM IPO breaking to highs at 62 is very, very similar in concept to that verb trade. And we need to always be thinking that and making these connections so that we can figure out like what is good, what are all the nuances, what are the variables. And the way I look at this is like, we kind of go from like 58 to 62. That's a 4-point move. We break to those highs, and then we go 62 to 66. That's a symmetric move. And so that's really euphoric now, right? We go from 62 to 66 in pretty much 2 bars with a very, very large wick. So that's where, even though this doesn't, by the time this does turn on the 2-minute bars, that's way too much of a retracement for me to want to short there, especially because you're kind of close to the breakout level by that point. But if you are going to short intra-bar, that 66 level is kind of interesting to me, just simply because it's symmetric from that $4 move to those highs. Again, 58 to 62, 62 to 66. If you see that go super euphoric like that and turn on the box, that is an interesting place to just short against highs. The final opportunity I want to discuss with this one is then, of course, the overnight, right? We are trading way above the pricing. We are closing above the breakout level of 62. We spent the whole day consolidating. These have all the indicators, especially being so hot in the first IPO in a while, of something that might really do a nice gap. And so that's where you can start to accumulate shares after hours on that pullback. I mean, this offered an opportunity to sell after hours, close to the close of trading around 8 p.m. This offered opportunities pre-market the next morning. That's a really solid play. And I would say all of these are pretty textbook if you dust off that playbook. It's something a lot of guys at SMB and Trillium do a lot of the time. So this was just a beauty opportunity, I think. A lot of people were caught offsides just because there hadn't been an IPO in a while. But guess what? You know, the best traders, they're adapting, they're ready, and they're doing that prep work. So I really love this, and that's kind of why this was my number one. So next up, we have the CART IPO about a week later on September 19th. And so this one, right, was interesting in the sense that it opened way above pricing. So especially with ARM having done so well, you might have the bias of what if this starts to make similar long opportunities, but then we can't bounce off of that 41 support level where we opened. And so what that does is, again, so often these make a nice opening drive. That break of 41 is just textbook. You can have your little sell stop in there, and that just catches you a nice little leg. So I did a little TikTok video on this as well. None of those later consolidations do I love so much. They're a little bit too strong in the bounce, or a little bit too short in the consolidation distance. So like, yes, this continues to trend lower over the rest of the day, but nowhere would I really be licking my lips so much or loving it a ton. I do think towards the very end of the day at around $36, that break is a little bit tempting. But again, I'm probably not losing sleep if I don't go for it. Overall, I think the best opportunity really was that that break below 41 bucks. I think that's a standout there. And now we are going to jump to RNAZ, RNAZ. This was September 25th. And so this is a stock that's in play pre-market from the news of their glioblastoma drug trial results. And so kind of textbook again. And like, one thing I would say is like, you need to really start connecting these biotechs, especially pre-market, as being good opportunities. We had seen the VTGN move. This is another one that really went. And like even more recently, we saw that TPST. So you really want to just be aware of what's in play. And so we had that breaking news play where you can buy the initial headline. You're not getting so amazing a move. Nevertheless, it's still something. But then what happens is once this later on goes parabolic, like I don't love it off the open just because the bars are kind of rangy, but it does go parabolic. And then you can just short that right side of the V. One interesting place to short is that limit down once the momentum shifts. If not there, nothing wrong with that opening print. That's not really a chase to me in the realm of how big this move is. Yes, I would have loved if that opening print of after that first halt was a little bit higher and close to those highs, but nevertheless, I think there's enough meat on the bone to justify this. And so often when you get multiple limits up into the move, you can at least expect one limit down, well, really more than one limit down following that. So what ends up happening is following that limit down, this really gaps and kind of retraces the whole move. When something kind of retraces that whole leg pretty much, I don't really feel the need necessarily to wait for prior bar highs, like especially if your prior bar high is all the way, you know, back up to where we halted into that. Like I really don't want to use that as a stop. And because we're all the way back at the moving average, it's totally acceptable to take covers there. Nevertheless, like you don't end up that hurt. If you do give it prior bar highs, you kind of just get out at similar prices anyways. So yeah, I mean, I think this is just kind of one of those things where there's a little long opportunity, but then the short ended up bigger in this. But I think what's also important is, again, like, so then you have another data point in your head for what then comes the next day, which is this SLNO on September 26th. And that, again, this is why it's just so important to quickly adapt to the themes of what's moving and getting in the heads of these day traders. So that RNAS had ran that prior day. SLNO, similar story. They have positive pre-market data on the Prader-Willi syndrome, probably butchered that, but it's the same basic strategy, right? You want to buy the headline, quick as you can. You can be setting alerts for the stuff, same traditional stop using 2-minute bar, break of prior bar lows, and you catch a very beautiful leg. The rest of the stuff ends up a little bit kind of choppy and rangy for me. No super great consolidations, although you could kind of argue buying that that curl at around 8:30 a.m. Don't get in much trouble there. Probably isn't a bad idea. Probably would dabble with it. But really that breaking news, especially after RNAS was so hot the prior day, it's so important to be on top of these themes. I'm not saying be in your seat 7:30 every day or 8:30 every day. But if something's in play, like we used to get during COVID, those vaccine headlines, right? For INO, for mRNA, and a lot of people wouldn't be in their seat that early, but like things were super in play pre-market. And it was one of those things where at that time, it really paid to be doing that. If you're getting a ton of these biotech headlines pre-market that really run, hey, I mean, you need to decide whether it's worth it for you. But for most traders, like you need to, be there for every A opportunity you can. And that's definitely what these are when it's in play. So yeah, kind of just similar theme there. And now is the other trade that I want to dive deep on. Something that I think is probably overlooked for many traders, but I think this is also a lot of good learning lessons. And so I think ARM and probably this trade in oil, or the futures / CL, I think those are going to be the two big learning lessons that I'd really like to impart on people. So oil had been strong over the last few months. What we have on November 27th is we had an incredibly strong breakout day on talks of Cushing tank bottoms. Essentially, oh my God, CL is the futures contract for WTI. If they're running out of oil in Cushing, where WTI is settled, could that cause the price to spike? Realistic worries, but a lot of the times by the time Bloomberg, Reuters, CNBC, everyone and their mom is talking about Cushing tank bottoms and Cushing running out of oil, that trade's probably too late, and it's probably a little bit panic, euphoria, whichever. And so we got a strong $4 move in one day. And what's really most interesting is like, yes, that's a huge move, especially when 2 days prior we were touching 87. So to go from 87 to 94 is jaw dropping to begin with, especially in a matter of kind of like a day or two. But then it's also just like where that pendulum of sentiment is, right? Like pendulum is reaching peak euphoria in that, oh my God, Cushing tank bottoms. Oh my God, like, where could prices really go? 100 plus, everyone's talking about it on CNBC. And so what's really interesting is on that super strong day is then after hours, we got some really interesting price action at 8 p.m. Eastern. And what happens is we saw explosive volume and buying in the WTI futures contract. So what's so interesting about this? And what kind of analysis and thought process did I have from there? So one thing that makes this so curious to me is, so 8 p.m. Eastern time is actually market open and kind of 8 a.m. in Singapore and China. And as always, when I do a video, you always need to hear the sirens in the background to again prove I'm in Chicago. I don't know why that always happens. But so 8 a.m. in Singapore and China. And so my suspicion is, right, somebody could be blowing up on where they were asleep overnight and WTI makes this massive move. And so what's so interesting about this as well is if you go to the Brent futures, which is /BZ, the Brent futures were barely trading, right? So normally, I know most people probably aren't too familiar with oil, but normally Brent and WTI trade super, super, super in lockstep in both volume and price. And of course, they're going to be arbed, so price should stay pretty similar. But what's crazy is like, Brent contracts were barely trading after hours, right? Like the price is almost gapping here and there, and there's no actual volume. Whereas in WTI, there was just massive, massive volume. So yes, price was moving in both, but like this really kind of told me that like something's going on in WTI and it's someone probably being liquidated. Like the 8 a.m. the 8 a.m. Asia start, the 8 p.m. Eastern time is just way too coincidental. And the other thing too is if you were to have been watching this at the time, the buying pattern was pretty much a bunch of buy order spikes. So somebody was really not rationally or efficiently buying this. It was not price optimal. It was someone that's so, like, at least to me, it just screams, hey, someone's being liquidated. They had some spread on or they had some trade on. WTI blows out overnight and this person then has to liquidate that side of the contract. Like, again, you're just never going to see that volume pattern where WTI is exploding in price and volume, whereas Brent isn't. So super odd. This tends to hint at an inefficiency. So again, we have something on the box saying we're reaching just the total liquidation. We have the pendulum all swinging to one side. We have essentially panic in the market that prices are going to have this huge spike. So we have a lot of signs of euphoria. And so what happens is once that you kind of get the right side of the V on WTI and /CL, there's no like super amazing way to structure this or super obvious entry besides kind of just taking like a lower highs and a lower low entry, or even kind of just shorting what might be a lower high as well later on. But then you want to kind of just give this two highs, and it's one of those things where it's like so often a bottom or a top is made by all those indications, right? Someone being liquidated, price accelerating in rate and time, volume capitulation, the pendulum and the news headlines being super euphoric or panicky. And so really, it's not that this intraday chart was like, oh my God, so incredible, but it had a lot of indicators that like, these are all the things that you need to generally put in a top. So sure enough, like this trade does end up being like a super kind of big picture top where oil ended up falling over $10 from here. I never would have necessarily held for that. Like I think even when this retraces that prior day's move and gets back into, I don't know, like 91, 92 bucks, like I think it's pretty reasonable to take off from there. I don't think it's so reasonable to suspect or to hold it into the mid or even low 80s. But I mean, technically, if you were being super systematic, that's where that would have kind of stopped you out. So I would say with this trade, the exit is kind of the hardest part, knowing where to exit and what makes sense. The entry is a little bit tough, but I think what's most important about this example is all those variables that I don't think we've touched on in prior videos, and kind of what really makes it top and how you can spot someone being liquidated and some type of market inefficiency that then gives you just so much cushion. You know, for oil to spike a couple percent after hours on just one person liquidating, that's a pretty good sign that, hey, so, you know, there's an inefficiency here. It's not being matched in Brent contracts, and the probability on this is pretty good, even if there's not some perfect way to structure this. So yeah, definitely a trade that isn't normally discussed. I think most people probably never even look at this thing at all and aren't even aware this happened, especially given the hours, but very good learning lessons for all of us. So nevertheless, these are what I view as the top ops for September 2023. Usual disclaimers apply. As always, feel free to reach out with questions and comments, and thank you all so much for watching.